Okay, here we go. Alrighty. Hello, everyone. Um, Today, the main topic that I want to cover is how someone who is responsible for fiscal oversight for a program um, will conduct their oversight activities when they receive an expense report from a subrecipient. Some of the things that you should keep your eye out for. And then also really quickly, though I think we've touched on this previously, also go through what it entails to receive an expense report and then integrate it within the finance tracker. Now, before I also do that, I will just emphasize the finance tracker is a temporary tool. Eventually, GovGrants is going to replace the finance tracker, and the finance tracker is basically going to become obsolete. But for the time being, especially because we're not 100% sure when GovGrants will be operational, this is the intermediary tool that people will use. So let me just share my screen really quickly. We're going to use, it relates to our conversation about Chicago and New York, funny enough. But you'll see here, let me know when you can see my screen. Yes?
We can see it, yep.
Okay, so I'm going to run through a fictitious expense report of a subrecipient called Establishing New York's Supremacy. And the subrecipient name, which you probably can't read, says definitely believe Mackenzie supports this, or DBMS for short. Okay, so this is a subrecipient that submitted an expense report, and let's pretend that the subrecipient is submitting the expense report for the first time. Okay, now the expense report, just to remind everyone, is three overarching components. The first is the expense summary report, which everyone is looking at now. That is the aggregate report that the two other reports I'm about to mention feed into. So this is the one that is reflected here. Then there is the itemized invoice report, which you can see here. This captures the non-payroll oriented costs over the period. And then there is, of course, the payroll report, which captures the personnel costs associated with the subrecipient. Let me just also quickly reiterate, it is the subrecipient's personnel, not contractors of the subrecipient. If the subrecipient has contractor costs, that should be reflected as a contractual service cost on the itemized invoice report. Okay. So really quickly, let's just look at what a fictitious expense report will look like. You see here, you have the name of the project, the subrecipient name, unique entity ID, agreement term. This is the entire agreement term. The incurrence period covered. So this will be, let's say, for example, I'm just pretending this is the July report, right? And so this is and we're pretending that the program starts in July, right? So this is their first report that they're submitting, and they've submitted this. They've noted that the date submitted to the county is August 17th, 2023. Now, this is already valuable information to perform an oversight activity, because if let's say this said that it was submitted in September. Technically, subrecipients, or actually I should backtrack for a second. The cadence by which subrecipients need to submit their expense reports is predicated on their risk level. High-risk subrecipients need to submit everything on a monthly cadence. Low and medium risk subrecipients can submit things at a quarterly cadence. Okay, so let's pretend we're working with a high-risk subrecipient that they have to submit their expense reports on a monthly cadence. No matter what, you have 30 days to submit your expense report after the conclusion of the month you're reporting on. So if you're reporting on July, you have until the end of August to submit that expense report. So I mentioned, right, that the date submitted already offers you some oversight gleanings, because if this was submitted, let's say in September, that's technically a breach. That's technically the subrecipient failed to submit their expense report in time. And that would just mean that we would need to demonstrate we've reached out to the subrecipient, maybe just confirmed that the policy states it needs to be submitted within a 30-day cadence. We've demonstrated outreach, reminding the subrecipient of the required or prescribed cadence. Already we have information that's important to inform any oversight activities from there. Now, again, you'll have the approved budget column. This is basically the allocation for the fiscal year for each budget category. So let's just pretend each category gets $1,000 for this example. Indirect cost, I'm pretending that the indirect cost rate, we're just assuming the indirect cost rate is the 10% de minimis rate, which means 9,000 times 10%. The maximum amount they can theoretically get by way of indirect costs is $900 in this example. Does that make sense? Good. Okay. Now, because I said this is the first expense report they're submitting, by the way, also interject in all the time. Feel free to jump in whenever, please. The activity balance represents the funds remaining of the approved budget. Because this is the first report being submitted, that means there's been no incurrences until now. So of course, the activity balance will equal the approved budget, right? So it's going to be the same exact thing for the first report. And then the expended amount reflected here, just for simplicity, I put it that it's $100 across the board. And again, the 10% de minimis rate of $90 incurred applied across all of these categories. I'm just doing this for simplicity. And then the residual balance will be activity balance, which is 1,000 minus what you've expended in the month of July, right? The expended amounts reflect what has been expended in this month, and that will equal the residual balance. Now, I mentioned again, just for clarity, the activity balance is what remains of the approved budget. In the second expense report, let's say the subsequent expense report that this same subrecipient will submit, the residual balance will become the activity balance of the next report, right? Basically, whatever was left in the prior report will be the activity balance in the next report. And then again, let's say we just expend the same amounts again. This will now reflect 900 in the second report. Let's just pretend they incurred $100 again. Then it will be 800 and back and forth, back and forth. That's exactly how it follows in each subsequent report. Thus far, this looks fine, right? The math adds up. This adds up. This stuff is included. The other thing you would check for, and by the way, I'm pretending this is a reimbursement request. We're not touching on advancements today. It's signed by the Chief Financial Officer, Frank Sinatra, a big fan of New York. It was signed 8/14, and I didn't put in a signature, but of course we would need to make sure that the signature was incorporated, right? Okay, so thus far, this looks good. There also, we'll touch on when the county is required to start incorporating their own details. I would only start the county program lead approvals after confirming that the corresponding itemized invoice report and the payroll report align with the expense summary report, okay? So here we have a pretty simple task at hand, right? Personnel here is reflected as $100. So if I go to the payroll report, I should see $100 added up. It seems like it's added up here $100. That means it's aligned. That's right. But let me just make sure everything looks up to snuff. We have Barbra Streisand, the singer-in-chief, Lady Gaga, the designer-in-chief, Eddie Murphy, the comedian-in-chief, all these wonderful New Yorkers. And they all, let's say, have gross wages of $100 across the board. Gross wages is meant to be inclusive of everything, not just salary. It's meant to be inclusive of everything, though some subrecipients do bifurcate it between salary versus, sorry, I'm saying hi to a person I've never seen in person for the first time. So it will be bifurcated between, some people will bifurcate it between salary and their benefits. If they are doing that, they should proportionally apply the percentage of hours worked on the project to the benefits as well, right? Of course, we shouldn't be paying the full benefits if we're only paying for a portion of the salary. But typically, it should be included as an aggregate, a gross wages here. Each one applied 20% of their hours worked on the project, 100 times 20%, $20. 5 people equals $100. This looks good, right? And then I look down below, same signatures, CFO or equivalent. Basically, whoever's responsible for the subrecipient's finances should be signing all of these documents. This looks good, okay? Any questions so far?
Hillel, not about what you've talked about, and I think I have a question, but I think you're going to get to it later, so I'm just going to wait for that one. But tying this back to the recording you shared with us to look at in advance of our meeting today, I recall that, yes, for high-risk subrecipients, a monthly cadence for the expense reports with the additional itemized and personnel supporting reports to that. The other question I quickly had, and I know we're not talking about advances today, but if they're doing an advance, they are able to submit these quarterly, right? But if they're doing a reimbursement, do medium and low risk still get to submit these quarterly, or do they have to submit those monthly with the reimbursement?
Great. It's actually a fantastic question. So this has also been like an internal deliberation and debate because the whole reason why monthly makes a lot of sense, if you think about it, it would be for two reasons. For the high risk subrecipient, it would be to allow the county higher levels of scrutiny, right? So that they have more regular submissions and they have eyes on every single thing that they're incurring on a regular cadence. Otherwise, for low and medium risk subrecipients where the higher levels of scrutiny are not necessarily needed, the reason why we would presume people would want to do it on a monthly cadence is because they want to be reimbursed swiftly, right? They would prefer not to wait maybe until the end of a quarter to request reimbursement. I don't think we've landed on a formal policy demanding that low and medium risk subrecipients submit things monthly. However, I would recommend that they do. That would be my recommendation. Because again, many times the medium and low risk subrecipients prefer it because they want to be paid on a far swifter cadence. And then B, it just having a consistent policy across the board for at least one model of payment makes sense. So I would recommend monthly, though I still think this was something that we wanted to ask Annette, honestly. So I think it's a great question.
Thanks, Hillel. Does anybody, I just want to pause for a minute again too. Does any of the team have questions about what Hillel just shared regarding the frequency of submitting expense reports? Obviously in this case, right, if we're doing it for reimbursement, they have to turn these in so they can get their reimbursement, right? It's different than if they were turning this in to support their spin down of an advance. But does anybody have any questions about that nuance at the moment before we move forward? All right. I think we're good.
Okay. All righty. So we've confirmed the personnel line item on the expense summary report, right? This equals 100. And in the expense summary report, the expended amount for personnel equals 100. Thus far, we've checked off personnel. Now the other items, which again are the non-payroll items, which will be captured on the itemized invoice report. So here I'll go to the itemized invoice report and I'll see, just to quickly go over again, you'll have the same thing on the top, right? The same details on the top. And this is meant to be submitted as a package, these three documents. You'll have the vendor name listed here, budget category, invoice date, check number, invoice amount, and then requested amount. So let's just go line by line, right? So again, this is for the month of July. One thing that you want to confirm as you're reading through the itemized invoice report is to see the invoice date to confirm it falls within the period of performance, the month of July. Now, that being said, that's not always going to be the case, right? There are going to be times where people may have purchased costs towards the end of, let's say, June. And so they may only have the invoice available to share with the county later. So it not being within the incurrence period is not necessarily a problem, right? Like that can happen all the time. Maybe someone made a purchase and there was for whatever reason, a deferred obtainment of the invoice itself. So it can even be prior to even June. That happens. What we really want to be attentive to is like if you see, let's say, an invoice that says 7/2/20, right? So it was incurred in 2020, that stands outside the agreement term. That's immediately a red flag, right? That should prompt us to say, wait, hold on one second. Was this actually in furtherance of the program? It appears not. And I'll just tell you that has happened before where we've had subrecipients submit costs that preceded the period of performance for the program. And of course, that was ultimately denied. And I think it probably related to them thinking, oh, it would theoretically be eligible under the program, but you incurred it prior to the program being even operational. So it becomes harder to rationalize why that should be paid for with the program funds. So that's one of the things we want from the invoice date. Check number, people often ask, does it have to be a check? What if it's purchased in another medium? The answer is no, it doesn't have to be a check. It can be just a unique identifier. So let's say someone put like credit card, they purchased it with a credit card, you could put like CC and maybe the last 4 digits. Let's say it's a bank statement, you can that demonstrates payment, an invoice number, a unique invoice number. You could put those things here. It's just a way to like identify and align a cost with an invoice. The invoice amount is the total amount reflected on the invoice, but the difference between invoice amount and requested amount is that sometimes subrecipients may purchase something in bulk, right? And only a portion of it is going in furtherance of the program, whereas another portion of it maybe is for their own individual purposes. We want them to break out the requested amount because sometimes they are not requesting reimbursement for the whole, they are requesting reimbursement for the part that was incurred in furtherance of the program. So just like a simple example, let's say someone bought pencils or pens, right? Bic pens, $100 worth of Bic pens. And they know that like 50 of them are going to the program, but 50 of them they're going to keep for themselves. It has nothing to do with the program itself. We should be reimbursing them for the 50 that they're using for the program. And that's where you'll have a differentiation of 100 versus 50, right? And so just to demonstrate that here, you see we have 2 Amazon purchases associated with administrative costs, one for 100, one for 50, but they're only requesting 50 for this one and the total for this one. So for administrative costs, they've incurred $100, right? And then I would go back to the expense summary page and I would say administrative costs, 100. Cool, check, right? That looks good. And you would do the same thing for each and confirm that the amounts requested for the particular budget category aligns with the expended amount on the aggregate expense summary report. We have to make sure that those align. Any questions?
Hello. You mentioned this in the training you did more broadly in the recording you provided to us, but I think repetition always helps. So since we're talking about the itemized report and the payroll report, what are the requirements around the subrecipients submitting their supporting documentation?
You beat me to it. Love it. Okay. So great question. So for payroll report, this will also the requirements to McKinsey's question, the requirements are also predicated on the subrecipient's risk level. For high risk, again, the theme is higher levels of scrutiny. And so for a high risk subrecipient, they need to submit basically everything. That means they need to submit all corresponding invoices, payroll registers, proof of payment. They need to submit everything, right? For low and medium risk subrecipients, the payroll report, what you're seeing here, suffices in terms of capturing the payroll personnel costs of the subrecipient. That's it. That's all they need to submit. But they do have to provide the itemized invoices, the actual corresponding invoices for procurements made and captured on the itemized invoice report. So let's say I'll just give you an example for a consulting firm. Let's say they have a contractor consulting firm that's supporting their program. The consulting firm should provide, let's say, a one-page document with a letterhead that's an invoice that says we've incurred, in this example, $100 for the month of July, providing consulting services to the subrecipient, right? It just needs to be an invoice, but we need a backup invoice. So you would need to have 2 Amazon invoices, a Staples invoice, etc. You'd have to go down the list and you'd have to have an invoice for each. One of the unique decisions that was made in the original ARPA fiscal management development was low and medium risk subrecipients do not need to provide proof of payment with each expense summary report. They only need to provide that at the end of the grant. I should say many people have reacted and said, I don't understand that policy. I think it's just far more intuitive to incorporate to basically incorporate everything with each expense summary report. Otherwise, it becomes very complicated towards, right? If it's a multi-year period and we're having subrecipients go back and basically retrieve all of the proof of payments, it can get really messy. So a lot of people, as a best practice, have decided that they're actually, even for low and medium risk subrecipients, they're going to also require that they provide the proof of payment as well. However, just by way of technical rules, that's not required. But everyone needs to provide copies of invoices for everything on the itemized invoice report. Let me know if that answered your question, Mackenzie. Good? Okay.
Thank you. Yep.
Yeah, of course. So now really quickly, I just want to go through, it seems like we've reached the point, this looks good. The payroll report and the itemized invoice reports amounts equal what's reflected in the expended column on the expense summary report. So, and all the documents are signed. Again, I didn't include the signature here, but let's just pretend all the documents are signed. In my mind, this looks good to go, right? This looks great. What is then required is the county to basically formalize that they've reviewed this package and they've deemed it acceptable. It is required that there are 2 layers of approval, the first being the program lead, the second being the fiscal lead. Both of them have to sign the form, and the signatures are captured on this main front page document of the expense summary report at the bottom below over here. This will be date submitted for payment. This is going to be when you're submitting it to through Oracle to initiate payment. You will have an invoice number. This has a format that you'll see reflected here, where for reimbursement it will be REM, the program number, the acronym for the subrecipient, and then the number invoice it is. So you see here, this is the first invoice, so it's 001. If they're submitting their subsequent invoice, it will be 002. You'll enter the program ID, which will also be NT333. Enter subrecipient's risk level. Did subrecipient submit all required docs? Again, this just basically functions as an attestation by the county that we've reviewed this. We've confirmed all of the required documents have been submitted, and it's good to go. County department name, county department number, signatures, date of signature, and then this will be good. And then, of course, you will upload this to the SharePoint for document retention purposes, right? This will basically codify this expense report as complete, reviewed, approved. Without these signatures, this can't be submitted for payment, right? Or without these signatures, this can't be deemed complete to account for an advanced drawdown. We need to have these signatures. I emphasize that because one of the themes that we're gleaning from some of our oversight activities of different programs is that several program leads are neglecting to sign these documents. It's really, really, really critical that program leads and fiscal leads sign these things, because otherwise, especially in the context of a reimbursement, if a prospective auditor will come in, see that a payment was made without the required approvals in place, that can result in a finding on the county. I'll even just tell you, there is one subrecipient who went through the risk assessment process for ARPA, and on their risk assessment, it became clear they received the finding because they did not follow their dual approval process similar to the one that we have here. So we really need to make sure that everyone's signing the documents and demonstrating that the approval process is being followed. Any questions? Okay, onward. So really quickly, oh, sorry, go ahead.
I was gonna say, yeah, sorry, I said no questions in my head movement, and then I realized. So I just want to make sure for everybody on our team too, you may be thinking to yourselves at this point, why do I need to know this, right? I know when we met with Hillel, I think over a month ago now, to talk about advances, we'd mentioned that there are going to be a couple, 2 to 3 of these initiatives that we are actually the financial lead for on behalf of the department, right? So most of you, this won't impact you, and if it does, you may have one, right? But beside and apart from this, the other reason we're going through all of this is that, as Hillel just mentioned, the departments are really responsible for taking, oversight of their subrecipients. However, as we kind of continue to move into the future and maintain and sustain these programs into upcoming fiscal years, there likely will be a level of additional scrutiny and oversight, spot checking, that our team is doing to make sure that departments are following the protocols as we put into place. So you guys won't necessarily be having to, do this all of the time for all of the initiatives that fall underneath your portfolios, but it will be important you understand how this all works, because at a minimum, we'll be wanting to make sure that we can adequately double check to make sure everybody's following the rules, and then reach out if we find that there's any inconsistencies. Thanks, Hillel.
Yeah, of course. That's great context, actually, Mackenzie. Yeah. So like one of the things that like I'm doing in the background as an example, beyond what I know we've discussed previously, where I'll perform some of these spot checks in the midst of an advancement request, right? Just to see if like expense reports were submitted properly, et cetera, which is true. That will happen as well. I'm also providing oversight support just separate from the advancement process to ensure, exactly as Mackenzie said, that expense reports are being filled out properly, they're being reviewed properly, and also there are no errors, which I'll just tell you, like we've found many errors throughout expense reports, which ultimately resulted in some instances of overpayment by the county, right? So that's really important because ultimately it means that we'll be saving funds that might otherwise have not been identified that should have been recouped or could have been applied for other costs that were eligible instead of just blanket overpayments, right? So they were like, I'll just give you an example. I'll use here as an example. Or actually, you know what? I'll use here. This is actually, for illustrative purposes, a perfect example. This is a real case. What I'm describing right now actually happened and required us to then make subsequent fixes to ensure that this was corrected in a successive expense report. So just looking at this example, right? We have, again, the personnel. They have the gross wages paid, which amounts to $500. But again, we're only paying for the proportional time that was actually applied to this project. So each of them were 20%, $20 each. So this is the amount that we should be paying for from the county funds, right? There was a subrecipient expense report that someone submitted where the subrecipient mistakenly put this on the expense summary report, the total gross wages, not accounting for the proportionality of what was applied to the program, which meant we paid, in this example, we would have paid $400 above what we were supposed to, right? So that happens in expense reports, and I think it's going to be critical to have people monitoring, performing spot checks to ensure that things are being submitted properly, signed properly, but also that there have been no mistaken, erroneous payments throughout the program oversight. Okay. Really quickly, I do want to show how we would go about now.
Quick question.
Yeah, please.
Back on that last form or report, like column C, there's no way, I guess the formula wouldn't necessarily carry over and have that column locked at all. So it just carries all the way down to the totals of the 100. The form doesn't do that, right? It's all just
Correct.
manual. Okay.
It's all manual, which is the worst. But yes,
Yeah. Okay.
that's
Just
and
wondering.
that also necessitates the check.
Yes.
Great question. Yeah. Okay. So now I just want to show what will ultimately go into the finance trackers, right? Another thing that we'll do in the oversight is make sure that the expense reports and the finance trackers align, because we don't want to, first of all, we don't want to see any misalignment. Something that can be caused by a misalignment is in an expense report, let's say here, right? Again, $990 is the requested amount for reimbursement here. Let's say it's paid in EBS, $990. So obviously in EBS, it will reflect $990, a $990 expense. And then if the finance tracker is billed improperly, of course, there will be a misalignment between the finance tracker and EBS, and that will create a mess. Thankfully, EBS should always, I think, be perceived as a source of truth, especially for reimbursements, where the finance tracker adds a little bit more by way of insight. Is EBS only accounts for dollar outlays, right? Dollars that actually went out the door, whereas the finance tracker accounts for also advancement drawdowns. So let's say we gave a subrecipient an advance of $100. In EBS, there was just an $100 expenditure that went to the subrecipient. In the finance tracker, which I'll show shortly, it doesn't show $100. We'll get expense reports similar to the ones that I'm showing here that will show an advancement drawdown. So let's say they only spent $30 of the $100. In the finance tracker, we will know that there's $30 that were spent against an advance, which means we have a residual balance of $70. I will know that through the finance tracker. You will not know that through EBS. That's one of the benefits of the finance tracker. But let me just quickly show, I want to show once we've deemed this approved, we think that this expense report looks good. How do we incorporate it in the finance tracker? I want to emphasize the answer is, and this was after a lot of deliberation and debate, but ultimately the decision was that we incorporate the aggregate figures. You do not need to incorporate the granular line by line itemized invoice, right? Like meaning you don't have to put Amazon in there and then another Amazon line and Staples, et cetera. And you don't need to put the names of each person. All you need to do is capture the aggregates reflected on the expense summary report. And so just going really quickly to the finance tracker. Can everyone see my finance tracker here? Yes? Okay. So we know, right, that we had all of the expenses, they incurred something against all of the expenses. It was for $100. I'm just doing this really simply just to show how it would work. This is an easy case because it was all the same, except for this. That was, right, 10%. Right? So we did all that. You can incorporate some expense details to describe things. So like, for example, Amazon purchases for whatever, right? But you can basically use this as a descriptive box. This will be allocated against the organization. So this will be here. Date of incurrences. This was for July. And again, really simple. You'll just copy everything down because it's all within a singular report. Date we received this. Again, this is important for monitoring purposes. So we see that this was submitted within 30 days of the month end. So that looks good. That means it was good. This was for the month of July. We'll copy all of this. Fiscal year period was covered. It was FY23. And again, this was incurred in FY23. We'll put this here. Was this reimbursed or advanced? In our example, this was a reimbursement. Again, this will be how we can track advancements if it is an advance. And then the invoice number, again, will be NT33 DBMS 001. And then this was all allocated against the singular invoice. Is this a capital expenditure? I think we do have a capital expenditure here. So for here, we'll say, yes, this is important for treasury reporting purposes to know what are capital expenditures versus those that are not. And we've basically submitted what we needed. You will also, once you incorporate this on the SharePoint, include a link where you'll have link to SharePoint folder for July expense. I don't know, I'm just putting something in here. Again, you'll copy this. You'll copy this all the way down, and then you'll I recommend hyperlinking. Hyperlinking. So you just put a hyperlink in here for where it will be located. And then because it's a reimbursement, what I would recommend is also when it's being paid in EBS, let's just say it's FY23. And if it's July, according to the county, it would be Q3. But let's just pretend they pay for it for whatever reason late. Let's just say they pay for it in November. Okay, so that will be Q4. Now, what do all these things do? So first, let's just say here, $100 DBMS month of July will populate July FY23 on this aggregate page. The original projected budget sheet is basically a monthly understanding of what the incurrences are relative to the relevant entities. I just put in this example, Cook County as an entity, the subrecipient as an entity. Let's say they have the total award is for 50,000 and this is their breakout, right? And we see that they've incurred this for July. This automatically populates with the inputs on the expense recording sheet, okay? Now, when you also put it here, when it was paid, what fiscal year was paid, and what quarter, what this will do is populate the admin summary page, which you'll see Q4 FY23. This was reimbursed for $990. Again, it's just good to know when we actually expended the funds. When did the funds exit the county? And we know that it was in Q4. You also see, by the way, let me just make this bigger. Probably gonna be massive. You'll see here, we have this also captures the amount expended relative to the categories listed, what the programmatic percentage is of these costs. You have advancement versus reimbursement breakdown here. We've just had reimbursements, so that's pretty simple. You'll also have capital expenditure breakdown. Again, we said one thing was a capital expenditure versus others. Nice and simple. This basically just gives you like some automated data that you can use. And if you want to maybe just like produce it in an external facing presentation, this kind of gives you like a seamless way to quickly share information pertaining to the program's budget. Any questions about this? But we've basically finished the migration of the expense report to the finance tracker. How do we feel? Seeing a smile. That's a good sign.
I mean, I think you did a really good job of clearly indicating, but anybody have any immediate questions or concerns?
And by the way, oh yeah, please.
I think it seems pretty straightforward. I love this chart.
I love it. That's what I want to hear. Okay, amazing. And I'll just say the next part of this is actually, so I haven't done what Annette has asked, and what Annette has asked is actually, I think, fantastic. So I'm annoyed that it's not yet ready for this presentation, but I will give everyone just a sense of what the last part of this presentation would entail and will entail eventually as we expand and supplement the current training that I'm about to shift to. But what Annette recommended, and I think it's a fantastic idea, is having kind of like a gamification of expense report reviews, so that basically people are like tested to see errors and catch them. You'll see now I'm transitioning to what is a nice review guide for the types of checklists that you should be thinking about when you're performing a review of an expense report. There's no gamification, so there's not going to be any test, but I'll show you exactly what I think Annette had in mind. Let me just make this presentation mode. Can everyone see my screen? Ugh. Wait for it, wait for it. Okay, let's start. So here, just a quick run through. Can everyone see my presentation? Yeah, good, okay. So just a quick run through of what's collected from subrecipients. Upon request, of course, all subrecipients need to submit a fund advancement request form, right? And then the expense reporting documentation, all subrecipients need to submit the 3 reports that we ran through in this call. However, the proof of payment needs to be submitted, and the corresponding invoices. Everyone needs to submit the corresponding invoices. And then the proof of payment only needs to be submitted by the high risk on a monthly cadence, whereas low and medium risk need to submit it only at grant closeout technically, okay? What are the things that we're looking for? A lot of words here, so I'm just going to run through basically the overarching items. What we're testing for are 4 things when we're reviewing expense reports. Accuracy, so making sure that the numbers add up, right? They make sense. They align with invoices that are shared. Eligibility, so are the expenses that are being shared clearly eligible? And I'll give an example of what that might look like when it's not. Completeness, are the reports complete? Are they fully filled out? An obvious immediate example of something that's not filled out is something that isn't signed by a chief financial officer or equivalent. If it's missing a signature, it's incomplete, right? Not good. And making sure that there are parameters checked. This particularly pertains to advancements, right? Making sure that like there is no exceeding a particular amount. And then reimbursements, of course, parameter check would be that a budget category line item allocation is not exceeded, though technically it would be allowed, but we want to be mindful not having that eventuality. So like, just to give an example to expand on that a little bit, let's say you have a $100 allocation for personnel and you have a $100 allocation for supplies, right? And you actually need to incur $110 for personnel. Technically, that's okay, as long as you stay within the $200 bounds. You can never exceed your fiscal year allocation, even if you may be exceeding the budget category allocation. That's okay, Ideally, though, we should be attentive to it before that happens. And there should be clear communication between the subrecipient and the county that that will happen if it's going to happen. But let's go through examples. And if you can't see this, please let me know. So let's just use examples of accuracy, right? Here's an example itemized invoice report. You see it's supplies and materials, contractual service. I'm sorry that this is a little foggy. Blurry, I should say. Contractual services, we see an amount listed $350, $300, $200, and it says $1,000. Obviously, the error there, it doesn't add up. 350 plus 300 plus 200 does not equal 1,000, right? So like that's something that should immediately go, hold on one second, that's wrong, right? That's a catch. That's something that you should be attentive to, making sure that amounts add up. Here you'll see.
Tracking, quick question. Are we tracking any of those examples that, or are we just kind of making note and letting the department know to make those changes and then kind of receive or wait until we receive the updated form?
It's a great question. So what the basically corrective action would be is we would notify like this is an example, by the way, Cecilia, your question is a great question. This is an example that would result in an overpayment, right? Because they put $1,000, even though technically what this amounts to is $850. So we would have overpaid $150. So what I would do in this situation, which I think would be the equivalent for you, is I would reach out to the department and I would say, it appears like there's an error on this report resulting in an overpayment by the county. We need to notify the subrecipient. We should make a record of it on the actual expense report itself. And let's say it's already been paid. That's okay. How we've fixed it is in a subsequent expense report, basically make a credit against a different expense to account for the overpayment of the prior period. Let me know if that makes sense, Cecilia.
Yes, I think, yes.
But we should absolutely, if let's say we raise something like this, I will make a point of like noting I'm waiting for the corrective action to make sure it's taken. So like there was an example, just to give you, this is a perfect example. Basically, the equivalent of this scenario happened where it actually resulted in an overpayment of about 70K. I notified the department and I put a note saying, check in 2 weeks, making sure that this was rectified, and it was. But until it was rectified, I did not allow that to leave my site.
Okay.
Make sense?
Yes. And then once we do make that, you said a credit or anything of that sort, and we do have to get it signed off, we would have that documentation that we received, this was an overpayment, we did a credit, and then ultimately hoping the director would approve this particular.
Great question. So this would basically be, again, let's just pretend in this example, it was a reimbursement. We made the reimbursement, we already paid, and then we realized afterwards that we screwed up, right? What I would do is I would, again, notify the department, communicate with the subrecipient, make a credit on the subsequent report, and then I would capture in either an email exchange or otherwise on the SharePoint, put everything on the SharePoint where it's clearly intuitive. What I'm always thinking about this is through the lens of a prospective auditor. I want it to be clear why there was an adjustment on a subsequent expense report. And so I'll incorporate either the copy of the email chain or just like a basic explanation and add it to the SharePoint adjacent to the subsequent expense report, explaining the adjustments.
Okay.
Make sense?
Yes.
Awesome. Great question. Okay. Other examples. Here we have, let's say this is an expense summary report, right? The aggregate report. And we see here, supplies and materials, expended amount is $400. Contractual services, the expended amount for this period is $600. I go to the itemized invoice report. I see 2 contractual services costs, one for $300, one for $200. That means contractual services only incurred $500, not $600 error, right? That's a catch. That's another error reflected. This is another example where the county overpaid $100. Okay, so these are the types of things that we'll be paying attention to. Another very common error that I check for, and this speaks to, I think, Cecilia, what you've mentioned previously about like, this is super manual. But one of the things we have to check for is similarly, if you see here, we have gross wages listed $1,000, $1,000. 50% of hours worked towards the project, 100% of hours worked towards the project, but you see that the percentage was not applied because the total project wages is 100% of the gross wages paid, even though they've only applied 50% of time to the project, right? This should really be $500. So that's another error. Cecilia, I saw you went off mute.
Yes. So if we consistently see, let's just say, hypothetically speaking, we see a department that is consistently making these like small errors and we're consistently having to go back and fix them, is there a chance that, let's say, they were a low risk and then move into medium risk, or do we just, that's kind of more locked in?
Fantastic question. So the risk assessment process, of course, precedes the program and will provide a designation for the subrecipient, low, medium, or high, right? Every 11 months, there is a risk reassessment process, which is exactly informed by what you just described, Cecilia. If we see recurring errors being made by the subrecipient, that will inform their subsequent risk reassessment. So I'll give you an example. I'm currently the person who's responsible for providing the fiscal recommendation that informs the risk reassessment 11 months later. I am going to be noting whether there are recurring errors by a subrecipient, which should either escalate their risk level from, let's say, a low to a medium, or maybe even elevate their risk level where it goes from like a high to a medium. If I see them consistently doing things well, that can also result in a improved risk designation. Does that make sense?
Yes, it does. Thank you.
But yes, absolutely. It should absolutely inform their eventual risk reassessment. It's not locked in stone.
Okay.
Also, let me just reiterate, by the way, because I also know we only have 8 minutes. If there are any, we're gonna have more of these check-ins because Mackenzie was 100% right that we should do several walkthroughs. But please don't hesitate to also shoot me emails with subsequent questions as well. I'll make myself available no matter what. Okay, so we did accuracy. Cecilia, did you have another question?
Nope, sorry.
You're good. Okay. Eligibility. Okay. So we touched on this briefly during the original presentation. Let's say we see here, Facebook ads, rental and leasing. Honestly, this example probably can fall within the accuracy category, but anyway, obviously Facebook ads are not rental and leasing. So that's just like a misattributed budget category, which it's a kind of like a minor error that doesn't need to result in going back to the subrecipient and having them resubmit their expense reports. I don't think that's necessarily necessary. You can basically just edit the form itself and make sure that that's clear and ensure also in the finance tracker that it's reflected properly. Though I will say you do also have to make sure that the activity balance in subsequent expense reports notes the correct attribution of costs in prior expense reports, right? Because this may have been reflected on the expense summary report as a deduction to the rental and leasing category, which it should not. And we need to make sure that the subsequent expense reports do not maintain that error. So that's just something to be mindful of. Here is an example. This is a real world example. Lucia has heard me say this example 100 times. One of the reasons why she despises me. Okay, so this is an example that I've had in the Emergency Rental Assistance Program. A subrecipient submitted an expense portfolio that had AirPods. It had an invoice for AirPods, and it was a $30 or something like that expense. I reached out to the subrecipient and I said, can you please explain to me how AirPods are in furtherance of the Emergency Rental Assistance Program? And they immediately responded saying, oops, that shouldn't have been included. That's a question of eligibility, right? That's paying attention to the types of expenses that are being incurred and the purchases that are being made and making sure that there's like kind of a reasonability test. Like, does this reasonably sound like something that is in furtherance of the program? If not, then we should raise questions why this is eligible. Another example I'll just give, this is a little bit different characteristically, but this is an example that we saw recently, and I raised it to Annette and she agreed. We had a subrecipient who submitted a cost for personnel, and they also included a separate line item for the same person for their entire bonus. And so the question that I raised was, I don't know, first of all, why are we paying for the full bonus if they didn't, if the amount of time they've allocated to the project is only like 50%. Why are we paying for the full bonus? But then B, I'm not sure that we're the ones who are responsible to pay a bonus, right? That's a question. That maybe that could be a conversation between the county and the subrecipient, where the subrecipient says, listen, we know that we have a hard timeline that we need to disperse whatever the funds are. Let's just use emergency rental assistance as an example again. We'd like to increase everyone's salary a little bit or give them a little bit of an immediate bonus to try and incentivize them to push through for the next few months. That might be something you agree on with the subrecipient, but it needs to be expressly articulated. It can't just be presumed. So that's something that also might fall within the eligibility check. And then I mentioned this earlier, another eligibility question, right? We said incurrence period provides us some insight, because let's say the date the program started was April 1, 2022, and you see an invoice for 2019, immediately red flag. I should say, hold on one second. That was way before the program started. There's no way that this is eligible, right? So that's eligibility questions. Completeness, I've mentioned. CFO signature missing, maybe the unique entity ID is missing. This will actually stop you from being like, I think the comptroller's office will inhibit you from making payments if there are missing components. And obviously, if on the county side, there are things that are missing, like the signatures and the date signed, that's going to create problems down the line and potentially result in a finding. Parameters check. Okay. This one is a little bit more complicated, and it does touch on advances. But let's just start here at the bottom. I want to give an example that involves reimbursements. I mentioned this, right? Let's say you have an approved budget of $5,000 for supplies and materials and contractual services. And let's say the activity balance for supplies and materials is $2,000 and $3,000, right? That means that we've incurred $3,000 previously and we only have $2,000 left, or we've incurred $2,000 from the $5,000, we have $3,000 left. And let's say that they incurred $2,500, so $500 above the supplies and materials. Again, not ideal, but if as long as the residual balance across the board is not negative, then it's technically fine. It just means that a proportional amount will be deducted from a different category. So you're going to have $500 less of contractual services in this instance, if that makes sense. For advancements, there's the parameters check that we've talked about, which is, and I think everyone here is familiar with, subrecipients can make a request of 25 to 50% of their fiscal year allocation. So where the fiscal leads will also perform a parameters check when it comes to advancements is making sure that the advancement request is within those bounds. If a subrecipient submits, Mackenzie actually has a lot of experience with this, because he also had to, right? You had to see some people who were attempting to make, you actually signed, right? When a net was out, one of the singular examples of an advance request that went far above the 50% bounds because it was a unique case, but generally it has to be within 25 to 50% of the fiscal year allocation. If you're the fiscal lead of a program who's trying to submit an advance and they're requesting your signature, and you notice that it's, let's say, 55% of their fiscal year allocation, we should not submit that to a net for approval, because it will immediately be rejected, right? Because it's outside the bounds of the parameters. I'm not going to run through this because this is very complicated. So let me just pause here. Any questions? How are we feeling generally? Do we agree on New York supremacy?
I don't know about that.
Okay, then this was an absolute failure.
I do have kind of a question, but it might be more specific to the county than the general.
Please.
So if a subrecipient or if a department bills over what they've allocated for a certain line, is that something that we can pay them for? Or is that
Yes.
something we need them to submit a budget transfer first before we process that invoice?
You mean specifically for like a category?
Yes.
So again, categorically, totally fine, right? Like EBS won't necessarily see the categorical breakdown of the cost.
Mm-hmm.
As long as it's within their fiscal year budget, in terms of the aggregate amounts, it should be fine. That you can process. Again, I would capture conversations, Mackenzie, I'm going to let you jump in a second. I was just going to say, I would capture conversations just noting that we've communicated to the subrecipient and said, FYI, you're about to incur a negative against a particular budget line item. And we should capture that on the SharePoint. Again, as a means of showing we've performed oversight, we've notified, we've been in constant communication with the subrecipient, but there shouldn't be an issue in terms of payment. I don't think that should result in an issue. Mackenzie, please correct me if I'm wrong.
No, and Marcel, to your question, the reason why we don't have to worry about that at our level is everything the subrecipients are submitting to the county for reimbursement is under line 58170, which is grant disbursements. So while the control budgets we have with our departments, right, where the department may have staff or other costs, including giving money out to subrecipients, when the subrecipients are filling these documents in and submitting them back to the county, it all falls under that same line item for our purposes. I think the question you raised on Marcella, and maybe we can dig into this at a different conversation, is should the departments be thinking about this? Is there a need for departments to consider doing a budget amendment, moving money between? And I don't actually know the answer to that.
It's
one of those
actually-
things I haven't gotten into, but
I was going to say, it's actually a good question. And B, I don't even think that we necessarily yet have a policy recommendation on that front. Like, I think that there's no precedent for it really yet of
Yep.
someone doing it. The best practices recommended is to try to stay as much as possible within the budget categories. But there will be instances where it might occur. And as long as we capture the communication that the county is basically affirming that it's okay, as long as it's within the bounds of the fiscal year allocation, I think it should be fine. It will look weird invariably on like expense reports having negative incurrences, but I think it's technically okay.
Okay, thank you.
Yeah.
any
other
other
questions?
questions, folks? Yeah. No. Going once, twice.
We did it,
Thank
team.
you, Hillel.
My pleasure. Okay, so I'm going to try and set up another call for probably maybe next week, so we can touch base and go over other in-depth items, though I don't think we have much else to cover. Hopefully this is a significant portion of what we needed to cover.
Perfect. Thank you, team. Thank you, Hillel. And yeah,
Pleasure.
Thank you.
we'll do it again soon.
Of
Bye,
course.
everybody.
And please reach out if you have any
Thank you.
questions.
Sounds
Thank
good.
you.
Thank you.
Bye.
Bye-bye.